Good morning, everyone. Today is Thursday, April 27th. My name is Deb Wilkinson, and thank you so much for joining in to our weekly ACA webinars. As of this morning, it may soon be changed back to the HCA webinars because we do have some news about the American Health Care Act, and I'll get into that in a few minutes. We do have some new folks on the call today, so I just wanted to again, introduce myself. My name is Deb Wilkinson. I'm the VP of the Health Plan Options Department here at URL. My duties include overseeing the individual and group health markets, both in the fully insured and the self-insured segments. If you do have questions, this format was created to get your questions answered. So if you do have questions, you can ask them in one of two ways. You can either type your question into the question box, and I'll answer those at the end of the webinar, or you can raise your hand icon, and I will unmute you, and you can ask your questions live. The webinars really are a place, hopefully, that you find you can get your questions answered. And you know, again, we are a small community, health insurance producers, and I think it's beneficial for all of us to ask those questions to learn from each other. I said way back in 2010 when this law was signed that we sink or swim together, and that has not changed in the these 7+ years now. So again, we're here to help. Just with a show of hands, if you can let me know if you can see my screen and you can hear me. Awesome, great. Okay. Then let's get right into the agenda. So Monday was our pre-Day on the Hill, and it was a CE course with a couple different speakers that really talked about transparency and how transparency is really going to be the key moving forward for any sort of law that may come out of the White House and the current law. Transparency of costs and incentives for employees and consumers to really make those choices based on cost with those transparency tools was really part of the discussion. We did have a segment where Shelley Bloom and Vince Phillips came in. They had just met with the PID, and you know, it's kind of interesting. Of course, we've been fighting all along since carriers have dropped compensation on individual health that agents can charge a fee for selling and consulting on these products. So, you know, we've been fighting for that to be allowed. At this point, it is not. And part of the way they want to change that is to change it legislatively and amend Act 147. And the insurance commissioner really doesn't have an appetite for that, and just because, you know, it of course opens up the Pandora's box, if you will, that if it can be changed for one segment of business, maybe it's to the advantage of a P&C agent or P&C carriers to go for a fee-based service as well. So again, it's not something that the insurance commissioner has an appetite for, nor do we have an appetite for telling the insurance commissioner or asking the insurance commissioner to mandate what carriers pay. Again, that's a slippery slope. We don't, you know, really want government enforcing, local government or federal government enforcing anything that a carrier can or can't pay. So it was kind of interesting how that all ended up. The Day on the Hill was Tuesday, and many representatives met with our local chapters and state chapters, and they did spend the day talking about Representative Tobash's bill that he's looking for sponsorship. And again, this is going to amend Act 147 to allow for individual commissions to be paid. I'm sorry, individual agents to charge individual fees for taking individual applications and enrollment and consulting. I did include the wording for Representative Tobash's bill that he's looking for sponsorship, as well as the other issues that PayWho was discussing on Capitol Hill on Tuesday. So those are in your handouts, and hopefully you'll read those. And if you have any additional questions, let me know. Congress is back in session this week, and the Freedom Caucus announced it was kind of a roller coaster. You know, day by day it changed that they would get an agreement, they won't get an agreement, they're not going to have a vote this week, they will. So as of this morning, the Freedom Caucus has announced that a compromise of the American Health Care Act has been met, and a vote is expected as early as this week, possibly even tomorrow. Some of the features are that that the Freedom Caucus wanted in is that states have the ability to choose whether they want to waive the requirement of essential health benefits and community rating, work requirement for Medicaid, having a high-risk pool for those states that elect to not have community rating, which is essentially no underwriting. So I did include the article, the New York Times article, for you to read. There are a few more details, but at this point, that's really all the information I have. I did search the web for a copy of any amended bill, but I don't have that, and I couldn't find it. Of course, once it passes the House, if approved by the House, then it will go to the Senate, and all of us expect further amendments. So at this point, you know, you have the basics of the bill, and we look for the final bill before it heads to Senate, and then, of course, we'll see what comes back from Senate. There's also a lot of budget talk this week with Congress being back in session, and one of the bargaining chips they talked about is pulling the funding that President Trump wants for building the wall between America and Mexico, and they were also bargaining with the subsidies. So the budget deal will include the continuation of the ACA subsidies. How they end up, if this HCA gets passed, who knows? You know, what does this mean for 2018? On the group health market, probably not a lot of change. Maybe a relaxation of some of the mandates, and that would certainly be my wish. It would be a wonderful world when no one had to monitor measurement periods, and that 40 is the new 30 for full-time hours, but we'll see what comes of that. For 2018, I'm not sure that it's going to mean anything. The carriers have to file their rates by the end of May, so we're less than a month away, and I don't know that any provisions will be set in stone in time for the filing. I have talked to the carriers, and they have, you know, their plan A, which is filing as the ACA law requires by May 21st, with a plan B in case anything changes. So again, I don't know that this has time to do anything for 2018 for the individual market or the group market, but you know, time will tell. We'll know pretty quickly, because if I've learned anything with this administration, things work very quickly. So I will, of course, keep you up to date. Cap Blue Cross, their new portal, which is built on the Salesforce Lightning platform, it is available for every agent that is appointed with Cap Blue Cross, and you can get your renewals there. You can do a lot of things on that portal with your current business. And some of our friendly competitors are making you, as agents, go into that portal and do your own renewals. I just want to let you know that, as I mentioned last week, URL will still continue to do your renewals. We will be proactive, as we were last year, in getting these renewals to you, getting alternate rates within the same carrier, and then, of course, alternate rates from other carriers. And again, what we did last year was we also made recommendations, which seemed to really help a lot. In the craziness of fourth quarter, you know, it seemed to really kind of streamline the process. So we continue, or plan to continue, that process, and hopefully make your life a lot easier during fourth quarter. There was a question last week asked on the Stabilization Bill, how one of the provisions within the Stabilization Bill basically allowed an insurance carrier to back bill for unpaid premiums before allowing new enrollment. And I did get some more details on it, that carriers have a 12-month period to look back. And what that means and what that really affects after talking with some of the carriers is there, surprisingly, 12/1 comes around since all individual plans are calendar year, and 12/1 comes around, seems that folks know how to game the system and realize that there's a grace period as well as open enrollment and new coverage for 1/1. So there are a lot of 12/1 premiums that don't get paid. So it is a positive thing for carriers. Where the struggle is again, if these consumers owe something, say with Capital Blue Cross, and they want to make application, they may just go to Highmark or any other carrier in the system. Another provision of this particular rule is that if the carriers decide to adopt this for 2018 and allow for premium, past due premiums to be collected, they have to mention this on every single marketing piece, every single application, brochure, etc. So again, I'm not sure with the time frame and when they have to file and what happens if they have to tweak applications, which really means they have to refile. I'm not sure if the timing is going to be for 2018 or not, meaning that any 2017 premiums that are unpaid could be collected. But again, it's all timing, and the carrier representative that I talked to really didn't feel that it was going to be something that would be implemented for the 2018 plan. So just wanted to bring you up to date on that. And commissions, we all work for money. We don't do this necessarily for fun. And Cap Blue Cross, they did announce, you probably saw from Brandy Coleman, our Director of Commissions, an announcement that Cap Blue Cross commissions would be delayed. They were supposed to be paid tomorrow, delayed and paid tomorrow, but now they are further delayed and they are scheduled to pay to us next Friday. There is some thought that they may not even pay next Friday or get us the information next Friday. We'll let you know. But this particular run that will come in next Friday, hopefully, will include all individual renewal commissions from January 1st through the cutoff date, and it will also include med sup commissions as well. There's also effective date issues on the group capital commissions, and those are going to be fixed in May as well. So a lot of commission issues, which always happens at the beginning of the year, unfortunately. But again, I wanted to let you know as much as I knew so that you know what to expect in your payroll. The HCC Short-Term Medical New PA application is still not approved. That means for short-term, we still only, in Pennsylvania, we only still have the IHC and National General. And again, of course, there is the 90-day limit. Each of these carriers allow you to rewrite within the same carrier, but again, 90-day limit for short-term medical. And for those of you that hopefully will be joining in the Starmark webinar today, it is being held from 2 to 3. Our representative is going to be running that webinar. I did include some handouts of the new Starmark program. It's all on reference-based pricing, and all of us currently know that the self-funded, level-funded programs, a lot of the provisions are outside of the ACA law requirements. And with the addition of reference-based pricing, which really just means that no network is affiliated with these programs, it really does kind of give an innovative sort of approach to employer-sponsored health coverage. And I think what's really unique is that reference-based pricing has been around, but it's really been limited to groups of 100 or more. So it's pretty exciting that the Starmark product and these reference-based pricing conversations are taking place for smaller groups. Again, it is a medically underwritten product, as all self-funded programs are. But if you have the right group, it is something that you may want to look into for cost savings, of course, to your employer clients. So that brings us up to the end of our webinar, and hopefully there are a lot of questions. And let's see, I don't see anyone's hand raised, so let's see what kind of questions we have. As always, while you're typing in your questions, I'll just remind you that the next webinar is next Thursday, May 4th. I'll be back here at 9:30, hopefully with more information in this rapidly changing market. Dave says, do you think the individual penalties will be removed retroactively for 17? Dave, I really don't know. I don't know. There's kind of, I've heard both approaches. I've heard some of my agent partners tell me that their accountants are saying that it's not going to be enforced. All I can say is right now it is the law of the land, and you know, I know the IRS has come out with saying that if that box 61 is not checked, indicating that they've had qualified coverage, that whereas before it would be kicked out, they're going to just let it go through. But they do allow for audits too. So again, it is the law of the land right now. Whether that will be removed or not, I don't know. And I'll get you the link for the CBC Portal, Dave. Dave also asks, will URL continue to do group mid-year enrollments and changes, or must we agents do that through the new CBC Portal? Dave, we'll continue to do all of that. We are high on service. We know that you guys have more to do than paperwork, so that's why we're your back office, and that's why we're here to support you and do those sort of things for you, so you can do what you do best, and that's sell. That's it. That brings us up to the questions today. It was an all-day question sort of day. As always, I truly appreciate you joining in. Hopefully you'll be able to join in to our Starmark webinar today. Even if you're already booked, if you register, you will automatically get a recording of the webinar that you can listen to at your leisure. You can also find it, if you don't register, you can also always find it on our homepage at url-insgroup.com under the YouTube icon. You'll see all of our webinars, including the DOL updates, etc. So as always, I really truly appreciate you joining in. Lots is going to be happening from this point on, I think, and keep the questions coming. Please enjoy the rest of your week and have a wonderful, wonderful weekend. Bye-bye.